Thanks so much for joining us. I'm Marlin Bohling with you, and I am pleased to be joined this time by Chris Swift of Swift Trading. He's based in Nashville, Tennessee, and he joins us right now to talk about the volatility in today's trade. We've had some choppy markets, and we had a little bit of, well, good news, I guess you would say, when we had some overnight sales that were reported by USDA this morning. Now, it involves soybeans once again, and this would be the third day this week here, Chris, that we had some soybean sales announced. Now, China was involved again, and they accounted for 132,000 tons of soybeans that were purchased, and that would be for, of course, new crop. And there was another 260,000 tons that were quoted for unknown destinations. On the surface, you would think that would be very supportive to the trade, although the market opened lower. Now, there was no mention of any corn exports on the overnight sale, but there was on the weekly report, and they had 527,000 tons reported sold last week. Not a real bad number. But if you look at the trade, I want to go to the corn board here, and interesting stuff going on in the corn, where we had everything trading lower early in the day, and now all of a sudden you have the September corn 3 cents higher at $5.54 per bushel, and these quotes provided by bar chart show December 3 higher now at $5.38 3/4 after a low of $5.14 1/4. So we're off of that now by 24 cents. Chris, what happened here in the last hour? Do you know?
You know, Marlin, it is probably a little bit bigger picture than just the last couple of hours, and we look at it from the standpoint of we understand that the rain and the improving weather will help the corn crop, and most people believe that they are going to have 2 million acres more planted when we get to next week's planted acres report. But we're in a battle, and we are in a huge battle between the inflation that we've had over the last 6 to 8 months compared to the actions by the Fed. So we actually need just a little bit of more time to see which is still the greater. Is the inflationary pressure still greater than what the actions taken by the Fed are? And we just don't know yet, but price action like today is friendly, in my opinion, simply because we're not just continuing to go lower and lower and lower.
And again, the long-term uptrend line, rather, on the corn, it has been almost tested, but not quite, and it is starting to bounce away from that a little bit right now. Just wanted to point that out, a little curious. Now, on the soybean trade, these have also come off of their earlier lows today. You have August now 11 1/4 lower at 13.34 3/4. It had a low today of 13.05 1/2. So that's quite a turnaround there. Almost 30 cents now it has rallied. November down 9 3/4 cents at 12.90 1/2 after a low of 12.61 3/4. And in the wheat market in Chicago, you have that September contract still 8.5 cents lower at 6.55 1/4. So it's struggling, but it's off of its low by 11 cents. September KC wheat down 3.5 at 6.17 1/2. It's off of its low of the day by about a dime. Minneapolis wheat, well, check this out. It has flipped around completely, and September now 13.5 cents higher at 8.15 3/4 after a low of 7.85 1/4 earlier today. That's a 30-cent swing right there, and now it's within a penny of its high of the day. So quite a trade reversal in that Minneapolis wheat market. By the way, in the cotton market here, you have July still down 21 points, October down 7, and December new crop cotton, well, it's down just 19 points now at 86.75, as it is 85 points off of its earlier low today. We'll come back in a moment, and we'll talk with Chris Swift about the developments in our livestock trade when we come back. Well, let's look at the livestock market. We'll start with live cattle, and our quotes provided by bar charts show there's just not a lot going on. So we're narrowly mixed. We have August down 37 at 122.50 per hundredweight. October a nickel higher. We're at 128.22. And so we're just narrowly mixed within a very narrow trading band here from top to bottom. Now, in the feeder cattle market, you have August up $1.05 at 156.75 per hundredweight, but that's off of its earlier high today by roughly 85 cents or so. It is also off of its low by about 90 cents. Now, if you look at the lean hogs, currently on the lean hog market, you have July back to trading. It's down 380. It had been expanded limit down. August down 135 right now at 99.37. So it's off of its high of the day by $1 and a dime, but it's way off of its earlier low by nearly $3. And let's go back to Chris Swift. Chris, we had the beef cutouts that came out. Choice cuts dropped another $4 today on the midday update. Selects were $1 higher. I see where we have just a handful of sales in Nebraska on a live basis at 126 today. But I don't know if that's enough to really read too much into that. What do you think here?
I don't think so, because it seemed like in the South we're still trading at 122, 123. So I think that those were probably some good garden spots up there where they're getting a little bit higher price for the cattle. But down south, and the bulk of the cattle trade still seems to be around 122, 123.
Is it still an issue with herd liquidation in the Northern Plains?
I have to believe so. This week we've seen several sales that were kind of out of the blue that popped up to market some inventory, and I have heard that there is still more and more inventory to be moved up there. North and South Dakota that generally has a lot of those old water potholes around, they're all bone dry. So it is getting very seriously. The increase in feedstuffs to carry these animals through the summer is very high priced and probably not worth it.
Well, the way the lean hogs are really struggling here lately, is there still very much more downside potential? Because you get another day like this, you're going to have all the contracts under $100 again.
That's true. And, you know, with the July contract, we've only got about 2 more weeks before it expires, and it has pulled literally $19 away from the index, and the index has begun to drop too, but we've noted belly prices are down sharply, and world pork prices down sharply as well. Both China and Germany have seen significant declines in their pork prices, so for the U.S. to come down and continue to its lower trade wouldn't surprise me, but it can't get too far away from that index until the index drops some more.
All right. Thanks for the commentary, Chris. Always good to hear from you. Chris Swift is with Swift Trading in Nashville. Tammy, I'll turn it back to you.